Hey everyone, this is just going to be a quick one. So yesterday I shot a video about the tariffs, and I mentioned Intrepid Potash should do well with the tariffs. And as we noticed this morning, it's currently up 6%. It was up a little higher. So if you bought that, that's fine. And if you want to sell it today for a quick 6%, congratulations. I didn't buy it for reasons I went into. I'm trying to focus on long-term compounders and stuff like that. But my main uh, purpose here was just to mention about the volatility in the market and that you shouldn't panic at inopportune times. And the this is just me walking through my process and my opinions. So, this isn't investment advice or anything, but you shouldn't panic. And as Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. And this morning, a lot of people were fearful. And if you were greedy, you could have made some really good money and or prevented losing some money. So uh, everything in my account was red this morning, and the S&P was down. And when I opened it up this morning, I don't normally wear a suit, but I had a job interview this morning. When I opened up my account, I saw I was down about $30,000. And if you're not working and you open up your account and you're down $30,000, that looks very scary. But when I checked now, and it's right before lunch, I'm only down $11,000. So that's fine. And I had been more than 100% invested in the market. I was fully invested, and then you can borrow on your securities. So at one point, I think I was about 115% invested. And then when I left my job on January 1st, I started reducing those positions, and I was 105% as of a couple of days ago. So, yeah, I've been trying to reduce it to zero borrowed money so that I don't have to panic in a downturn or have to sell anything in opportune times. But I did sell a bunch of things this morning. Nothing that was down a lot, but just to get that down to zero leverage. And I did buy a couple of things. And but as I said, I wanted to mention. Don't panic because the markets tend to come back. And if you have some favorites that you like, you might have taken an opportunity to add to there. So this is Kraken Robotics, and I did a video on it before. I'm up over 100% on this uh, in less than a year. But if you notice where it was today, it went from uh, it dropped to 157 at the open, and it's as high as 186. So that's a 20% difference. So, if you had seen this drop precipitously at the open because everyone was panicking, you could have bought some at 157 and you'd be up 20% uh, by noon. And then, you can sell that and take your profit or just sit on it. But, it's good to have companies that are sort of on your watch list that, you can add to opportunity when things go well. So, um, I have a position in a company that is like SPGI but different. And this one is always expensive. And if this had gone down a lot today, I would have added to this. There's another company on my watch list called FICO, and this also is usually very expensive. It's trading at 90 times earnings. And if this had come down a lot today because people were panicking, I would have bought some of this. The company I own quite a bit of is MSCI, which also is usually very expensive. It's 42 times earnings. I think S&P Global is about 49 times earnings. But at some point recently, it crashed here, and this is where I started adding. And less than a year, I'm up a lot on it, and this is a great company that I want to hold for a long time. So just a reminder not to panic when the market opens and the news is telling you to panic, because news makes money on commercials, and telling you to panic keeps you watching, and that is good for them but not good for you. There's a writer who is known for uh, I won't say predicting, but making a great deal of money during the great financial crash. His name is Nassim Taleb, and he wrote a book called The Black Swan. And one of the things he said is, if you're going to panic, panic early. What does that mean? So if you smell smoke in a burning theater, you run to the door, and it turns out that it wasn't a fire; it was just somebody smoking. You didn't really lose much, but uh, you talk yourself out of it and say, I'm going to wait and see what happens. And then it's engulfed in flames and everybody's running for the door. And now you panic, it's too late. It's the only time panicking helps is if you panic early. And if you think about what happened during the lockdown, a lot of people got sick from the uh, COVID-19, whatever you want to call it. Uh, and the ones who did poorly were the ones who sort of got sick in that hump, right? And they were trying to flatten the curve. And not an epidemiologist, but I saw early on that if you want to get sick, nobody wants to get sick, but you should get sick early or later. Early, there's plenty of hospital beds available. Later, there's better treatments, but you don't want to get sick in the middle when everybody's sick because uh, you're not going to fare well. So I sort of prepared for that or over prepared for that early, and then I did fine. But again, if you panic when everyone else is panicking, it's not going to do any good. So I don't want to say panic early, but if you're going to react early. Don't react when everyone else is reacting. It's not going to turn out well for you. And as I said, if you had seen the news this weekend and everybody's freaking out, and then when the markets opened, they opened down hard, and you said, I'm going to sell, and everybody else said the same thing, you would have done really badly. And if you had just waited till lunchtime, a lot of that had dissipated. So now the S&P 500, as opposed to being down like 1.75%, is down only 0.67%. So you would have done a lot better just staying calm and using your head. Anyway, good luck out there.